If you run an accounting practice in Australia, you are sitting on a business asset that most lenders do not fully appreciate. Your client base is loyal, your revenue is recurring, and the compliance driven demand for accounting services means your pipeline is relatively predictable regardless of what is happening in the broader economy. The challenge with accessing finance is helping lenders understand what your practice is actually worth and what the right finance structure looks like for a professional services business. Here is what is available to accounting practices, how it works, and what you can realistically borrow. Accounting practices have a strong profile with lenders who understand professional services. Recurring fees, long client relationships, and relatively low operational overheads compared to revenue make accounting practices an attractive lending proposition. The key is working with lenders who assess professional services businesses properly rather than applying a generic small business lens. Unsecured business loans provide fast access to working capital for technology investment, cloud accounting platform upgrades, hiring additional staff, marketing to grow your client base, or covering the cash flow gap that often occurs in accounting practices around tax season when workload peaks before invoicing and collection catches up. You can borrow between $10,000 and $500,000 based on your practice revenue and bank statements with approval in 24 to 48 hours. Practice acquisition finance is particularly relevant for accountants looking to purchase an existing practice or acquire a client book from a retiring practitioner. The recurring fee nature of accounting clients makes these acquisitions well suited to finance structures where loan repayments are serviced from the fees generated by the acquired client. Specialist professional services lenders understand how to assess and finance these transactions. A business line of credit works well for accounting practices managing the seasonal cash flow demands of a compliance-heavy practice. Tax time creates a surge in work and billing, but collection can lag, and other periods of the year can be quieter. A revolving credit facility allows you to draw what you need and repay as collection builds rather than carrying unnecessary debt year-round. For significant investments, buying into a partnership, major fit-out or office investment, or a large practice acquisition, secure business loans using property as collateral provide access to larger amounts at lower interest rates. How much you can borrow depends on your practice revenue, client base quality, trading history, and the purpose of the finance. Established practices with strong recurring fee income and clean financials access competitive terms from professional services specialist lenders. Applications take under 20 minutes online. A commercial finance broker familiar with professional services businesses can match you to the right lenders. Brokers are paid by the lender on settlement. Use the free business loan finder at Reliable Business Tools to find which loan type suits your accounting practice. 6 questions, a clear recommendation, no credit check, and no obligation.